We just played a bit of sound between you and Charles Schwab a moment ago.
Well, this is a story. There's two things going on here. First, it's this old-fashioned synergy story. You remove the costs, you keep the revenues. That's what's important. But more importantly, it's a scale story. When your average revenue per customer keeps dropping because you go to zero commissions, how do you make more money? You find other sources of revenue and scale up the issue. So there's two other parts of this business. There's the banking business that used to be very profitable. They charge very, very low returns, low rates for their customers. There's some pressure on them to raise the amount of interest rates they pay on their bank deposits. And then you have a very profitable advisory business. That business, that's going to be the battlefront in the future. They're going to go out and try to increase that business dramatically. Schwab has an advisory business. It's still small. Ameritrade has an advisory business. It's still small. But you watch, Carl, other companies like LPL that are out there that provide advisory services, that's where the money is right now. That's where the battleground is going to be in the future.
Wow. That's going to be a different way of thinking of both of those companies, Jim.
Yeah, I'm trying to get my arms around how do you make money. I haven't been thinking all morning. I've been plagued by E-Trade, what they have to do. Because you can't just do nothing. That's out. You have to do something, and you have to do something like you have to be like call these other companies right now. I love where the battleground is. Bob is so right because we don't talk enough about that area, but that is going to be a lot that's in play. And by the way, I'm going to say it right here. What does Goldman do? Goldman has been going down market, okay? Goldman, some people feel like that they've got a really good business plan. Other people feel like, well, I don't know. They're trying to be technology. They're trying to be credit card. Goldman is not. Goldman may not be big enough to go it alone at this point. It's only $80 billion. It doesn't raise capital. It doesn't raise assets the way Schwab does.
Think about advisory companies that provide services to wealth management, compliance, investment, technology services to these companies. These businesses are growing fast, and they're not under the kind of margin pressures that you're seeing, for example, in commissions, where we go to zero. That's why I'm telling you, advisory, wealth management advisory is the battleground right now. That's where I think you're going to see some major acquisitions in the next couple of years, Jim.
Oh, you are dead right. Remember, technology costs of going alone are exceeding advertising costs. It used to be that the big issue was advertising. The amount of technology you just need for cybersecurity identification, the amount of technology you need just to be able to handle all the payment processing is so huge. You know, you're looking at Goldman. Goldman took on the Apple Card. You know, people are worried still that it's just that they took on too much because you need gigantic scale to make everything work. Goldman doesn't have the scale. They just don't have the scale.
By the way, Jim, there is an ETF for this. You know, I love bringing this in. The IAI, can we put this up, please? It is the brokerage ETF. The problem is, of course, you've got Goldman in here as well, but you've got ICE, you've got NASDAQ, you've got Ameritrade, you've got Schwab, all about 4 or 5% by market weighting here. There it is, and that's a new high for that. Keep an eye on the IAI in the next few months as this whole battle heats up, Jim.
I think E-Trade should make a takeover bid for the IAI. Solve a lot of problems.
That's an interesting question. Why didn't they go after E-Trade? That's interesting. Well, they don't have much in the way of advisory services.
I thought that was going to happen, Bob. That's what I thought we were going to wake up and see, which is why I'm so thrown. That was the one that was supposed to be bought.
Yeah, but they don't have a big advisory services business. You know, if that's what you really want to grow.
You're absolutely right.
Yeah.
That's the sticky money. The advisory money is sticky.
Market check, though.
Great point.